All right, let's have some fun and look at the top 10 country interest rates. What you'll see is steep US inversion and a normal China yield curve. You can get global interest rates in about 70 charts in this presentation. Welcome to the Become a Better Investor community. My name is Andrew Stotz. Let's get started. Remember, you can download this free 100-page March 2023 global interest rate chart book by clicking on the Get the PDF button at myworstinvestmentever.com or by clicking the link in the description. So let's first look at developed countries. What I see is vast developed market country increases in short-term and long-term rates. Japan stays as an outlier, and the U.S. looks worse based on yield curve inversion. So let's see where interest rates are right now. What you're going to see on the left-hand side of this is the countries in Americas, Europe, and Pacific. Let's look at this. This is 3-month yields. The U.S. 3-month yield is at 4.9%. Japan is at minus 0.3, so still negative. Germany is at 2.6, so still pretty low. UK is at 4.1, and France is at 2.8, also pretty low. And now that oil and gas prices have fallen a lot, in Europe, it's quite possible that they may not need to raise them as much. Now, let's look at one-year yield. In the U.S., one-year yield is 4.7%, Japan minus 0.1, so still negative, and Germany 2.9, and UK 4.0, and France is at 3% for one-year money. And finally, 10-year. The 10-year U.S. Treasury bond is at 3.6%, which is quite low. Japan is positive but tiny. It's 0.3%, even though we know inflation is kind of out of control in Japan. Germany is at 2.3%, UK is at 3.5%, France is at 2.8%. So long-term rates are pretty low for the largest of the developed market countries, keeping in mind that I tried to pick the top 5. So let's look at year-on-year changes. Here we're looking at the different countries. We can see the U.S. has gone from 0.5 to 4.9 on 3-month bond yields. And that's a 4.4 percentage point increase, pretty massive. Japan is down about 0.2%, so there's actually a fall in the 3-month bond. And Germany is up from minus 6 to 2.6 for a 3-month government bond. That's a 3.2 percentage points increase. And UK is up about 3.5 percentage points from positive 0.6 up to 4.1. And finally, France has gone also from negative 0.6% up by 3.4 percentage points to 2.8. Now let's look at the one-year yield, which has risen significantly in developed countries. Only Japan's yield didn't move. The U.S. one-year yield has gone from 1.6 up to 4.7. That's a 3.1 percentage points increase. Japan, flat at about 0.1 or 0. That's negative. And Germany has gone from 0.4 negative to 2.9. Again, this is one-year bond rates, and that's up by 3.3 percentage points. And the UK is up from 1.3 up to 4, which is 2.7 percentage points. And France is up the most on a percentage point basis from minus 0.5 up to 3. That's 3.5 percentage points increase. Now, let's wrap it up by looking at the 10-year yield, which grew in all developed countries year on year, even in Japan. So the U.S. 10-year yield was up 1.2 percentage points from 2.1% 12 months ago to 3.6% now. Japan was up by 0.1 percentage points, so a tiny amount, and has gone to a 10-year government bond yield at 0.3, crazy low. Germany is up 1.8% from 0.5 up to 2.3. UK has gone from 1.6 up to 3.5, and that's up 1.9 percentage points. That's the largest increase on a percentage points basis. And France is up from 1 to 2.8. That's 1.8 percentage points increase. Now let's look at the rate progression of these developed market countries. And here what we can see is that the 3-month yield has risen steepest in the U.S. Germany, UK, and France 3-month yields follows the U.S. but with a delay. And Japan remains an outsider and continues with its negative interest rate policy. What about 1 year? Well, 1 year in developed countries moved up aggressively. However, in March 2023, the U.S. one-year yield dropped for the first time in 12 months. And we also see a slight drop in Germany and others, and France. So there is some pressure coming off on the one-year yields. Now let's look at 10-year. 10-year yield has risen in all developed countries, but starting to show flattening behavior recently. Since October of 2022, the 10-year yield among the developed countries hasn't moved much and stayed flat. But if we look at it on a year-on-year, a month-on-month basis, basically March 2023 against February 2023, they all have come down. What does this mean? It means that people's anticipation of inflation is potentially falling, and therefore they don't need as high of compensation for 10-year government bonds. And the other one is that they may think that the economy is slowing, and therefore the real rate of return that they're going to earn after inflation on these bonds is less. So now let's look at the yield curve. What we can see here is the U.S., the 3-month yield curve inversion in the U.S. widened after the Fed aggressively increased interest rates. Basically, the yield curve used to be positive. We had long-term rates of 2.3, which is incredibly low, and short-term rates at 0.5, which was also incredibly low in the U.S. But that shifted massively. By February, long-term rates were up to 3.9, and short-term rates were up to 4.9, and that's a inversion of about 0.9 percentage points negative. We can also see the same thing that happened here is that 3.1% in March and 4.9% for short-term money means an inversion of minus 1.3 percentage points. So now, one-year yield curve in Japan steepened over the past 12 months. And we can see that it's quite the opposite is true as the differential between 10-year yield and 3-month rates doubled over the past 12 months. And 10-year yield in Germany turned into negative territory, but far less severe compared to the world. We can see that the German government bond yield is now slightly inverted by about 0.3% difference between long-term and short-term rates. And the 10-year yield curve in the UK also saw a slight widening of its yield curve inversion. And finally, the 10-year yield curve in France flattened massively and soon seems likely to invert soon. In March 2023, the 10-year yield was the same as the 3-month yield. So what is the key points and the bottom line? Aggressive short-term rate hikes led by the U.S. and followed by European developed countries. Long-term rates seem to have peaked and fell month on month. And Japan, with different policies, sees almost no movements in both short-term and long-term rates. And the U.S. faced the steepest inversion among the developed countries. Japan maintains a positive yield curve. The bottom line, vast developed market country increases in short-term and long-term rates. Japan stays on outliers, and U.S. looks worse based on the yield curve inversion.